Hello, I'm Robert Zavala. I'm a local real estate agent out of Wichita, Kansas, and I've been getting a lot of phone calls from people I work with about the interest rate increase that occurred yesterday. So I wanted to just give you some insights on what this interest rate increase could mean to your mortgage. So we see here, as of 7/23/2026, that was yesterday, the 30-year fixed rate mortgage is 6.58%. Most of my clients fall in the 30-year fixed rate mortgage. However, if you're fortunate enough to fall in the 15-year fixed rate mortgage, you will see it's a little bit lower. But let's examine what happened from the 22nd to the 23rd. So let's look as of July 23rd. We are at 6.58%. July 22nd of this year, we are at 6.55%. Now, just to give you a reference, last year at this time, we're at 6.74%. So we're definitely lower now than we were last year. However, we had a small tick up as of July 23rd, which would have been yesterday. Now you'll note for the 15-year fixed rate, if that's the route you're planning to go, we went from 5.93 to 5.96. As of a year ago, it was 5.87. So definitely that has ticked up since last year. Now, what does all this mean? I mean, that's really the big picture, right? That's the phone calls that I've been getting. That's the questions that people are asking. So let's see if we can't answer what this means to the buyer in particular. There was a small uptick from last week to this week. For those of you who are following along, that is 0.03% increase. And we're still lower than last year. I just want you to keep that in mind as we go to the next screen. The effect it has on buyers in particular is the bottom line. It's the monthly mortgage payment, right? The monthly mortgage payment is going to be higher because the interest rate is higher. Of course, there's ways to navigate around that. You can have an increased down payment. You can pre-purchase points. But for most of us, we're going to experience a greater monthly mortgage payment. Now, remember, the increase was just 0.03%. So the monthly mortgage is not going to go that high, but it will start to make a difference. For example, suppose you have a mortgage for $150,000. Now, keep in mind, everybody has a unique situation. A lot of it depends on down payment. It depends on other products being purchased. But let's just speak in generalities. Suppose you have a $150,000 mortgage and your monthly mortgage payment is $953, and that's at a 6.55%. I'm sorry, 6.55%, right? Now, with this increase, you can anticipate a couple of dollars more. It won't be huge. Let's give it an example of maybe about $953, and that's for a 6.58% increase. Now, what I've been telling my clients is really like, this is the time to shop around. You know, we're at a very volatile economy right now. We see fuel prices going up. We see grocery prices going up. Everything's going up. Price of vehicles, And the last thing that we want to go up is our monthly mortgage if we don't have to have it go up. And really, those buyers who are buying at the top of what they're pre-approved for, if you're pre-approved for 150,000 and like you're buying at 150,000, you have to be very cautious about the small increases that could apply. That might even push some people down to looking at houses in the 140,000. It just depends on everyone's particular situation. So I think the bottom line here is don't panic. The interest is a cyclic value that goes up and down, up and down. Unfortunately, we just had a tick up. So my advice to buyers at this point in our market, keep in mind the market changes, but the three-legged stool is really the way to go. And here's what I usually say. The first thing, we don't purchase solely on interest rates. We purchase on financial readiness. Right? When you're ready to purchase a house, that's when you purchase. You don't base it solely off interest rates. Now, interest rates can affect the financial readiness, but that's not the only factor in financial readiness. We talk about occupation. We talk about cash reserves. We talk about how many income streams we have in the household. Is there a spouse? Is there another person that's going to participate? So financial readiness is one leg of this three-legged stool. The other leg are your goals. Some of us have goals to buy a house by a certain age. Some of us have goals to buy a house in a certain year. Like at the new year, sometimes we make a goal, I'm going to buy a house in 2026. Some of us have a goal to upgrade our home because the kids are going to college and we don't need a big home. So first, we have financial readiness. Second, our goals. And the third leg to our three-prong approach is finding the right home. All of these have to align before one makes their purchase. Financial readiness, goals, and one of the most important is finding the right home. So hopefully this gives you a little bit of insight what I'm seeing happening in the market and how the market is responding to it. In particular, buyers. Sellers are also experiencing some of the hardship of higher interest rate, but I really wanted to focus on my buyers in this video. So if you have any questions or if you're looking to buy a home, please reach out to me. I'm more than happy to help you.